How to trade from the top loser board. The buy when the blood is flowing strategy. For crypto traders, the top loser board, the asset with the biggest price drop in 24 hours, is often regarded as an opportunity hunting ground. The principle is similar to Warren Buffett's philosophy. Fearful when others are greedy, greedy when others are fearful. But how to take advantage of it without getting caught in the dump? Check out the data-driven strategies and market psychology of global traders. Chapter 1. Reversal Patterns. How to read price movements before a trend reverses. Double bottom. When price dances on two bottom floors. Imagine an asset price like a ball that bounces twice on the same floor. A double bottom, a W pattern, is a strong signal that the decline has run out of steam. Practical example. SOL/USDT on Binance. After falling from $120 January to $50 February, SOL tried to rebound to $70, but failed. March, price tested $50 again, but this time aggressive buyers stepped in. Twin valleys were formed at $50. Confirmation. Price broke the neckline at $65 on the 4-hour candle, then shot 30% to $85 in 48 hours. It's like a market stress test. If the $50 level holds twice, it means that sellers are no longer able to push lower, says James, a London trader who uses this pattern on SOL. Bullish hammer, a savior candle in the midst of chaos. This candlestick is a sign of changing market psychology. The length of the lower shadow indicates sellers tried to crush the price, but failed. Buyers took over before the close. Case study, ETH/USD on Coinbase, June 2022. ETH plunged from $880 to $600, minus 32%, in 3 days due to the Terra Luna crisis. Day 4, formed a hammer with a lower shadow to $580. Price crashed briefly, but closed at $620. A 40% rebound to $868 occurred in 7 days, driven by news of the merge upgrade. A hammer at the end of a downtrend is like a seller's white flag. When the price closed above 2/3 of the hammer body, I immediately entered long, said Anna, a Chicago trader who made 2x profits on this rally. Breakout from a bearish trend line. When a downward prison breaks. A bearish trend line is a diagonal line that connects lower highs. A breakout occurs when the price breaks to the upside with volume confirmation. Real example, BTC/USDT on Binance Futures, Q1 2023. Bitcoin dropped from $25,000 to $19,000, forming a trend line with 3 touch points. Lower highs at $22,000, $21,000, $20,500. March 14th, price closes above the trend line, $20,800, on the daily chart with volume 30% above average. Result, rally 25% to $25,000 in 2 weeks. German trader Klaus shares his strategy. I draw the trend line in TradingView. If the breakout happens after 3 touches, it's a high probability signal. Golden rule, don't rush in before confirmation. Double bottom, wait for a break above the neckline, not just a touch of $50. Use a buy stop order at $65.05 to automate. Bullish hammer, entry after a confirmation candle, e.g. big green candle after the hammer. Trendline break, make sure the close is above the line, not just a spike. Use 4-hour/daily charts. Bittersweet story without confirmation. In January 2024, XRP had a fake breakout at 62 cents, breaking the 1-hour trend line, but immediately rejected to 58 cents. Traders who entered at 62 cents without waiting for the daily close were stuck losing 6%. Companion tools to minimize risk. 1. Volume. Make sure the breakout is supported by volume 20 to 50% above average, an indication of institutions entering. 2. RSI divergence. If the price is lower low but RSI is higher low, like in ETH June 2022, it's a reversal alarm. 3. Risk management. Stop loss at 3 to 5% below the reversal level. Example. SL at $48 for SOL double bottom entry at $65. Why does this pattern work in the global market? Traders' psychology is uniform. They read the same levels in TradingView, using similar indicators. When BTC broke out at $20.8 thousand on Binance, traders from New York to Zurich reacted simultaneously, creating a FOMO effect that amplified momentum. It's not magic, but a game of probability. With a risk-reward of 1:3, a 35% win rate is enough for profit, concluded Pierre, a fund manager from Paris. Chapter 2. Volume. Reading the screams of panic and the whispers of accumulation. Capitulation. When markets scream and traders give up. Capitulation is the psychological moment when retail traders panic sell their assets in large volumes, often at the end of a downtrend. It's like an earthquake that clears out the debris of sellers before a rebound. Dramatic example, BTC/USDT on Binance, April 2024. Bitcoin plummeted from $68,000 to $62,000 in 6 hours, with selling volume 2x the daily average, reaching $40 billion. At $62,000, a long wick, long lower shadow, appeared on the 1-hour candle, a sign of sellers running out of steam. Result: 18% rebound to $73,000 in 3 days, triggered by the liquidation of a $600 million short position in futures. Volume is the institution's weapon. When retail sells at extreme volumes, it's a sign that they are clearing the market for silent accumulation, said Michael, a veteran New York trader who caught the rally. Accumulation in the shadows, smart money's footprint in the order book. The whales never make any noise. They accumulate assets at support levels when the market is sluggish, as evidenced by the thickening order book. Real case, ETH/USD on Kraken, August 2023. ETH continues to be battered from $2,000 to $1,550, minus 22%, due to SEC regulatory concerns. At $1,500 to $1,550, a $200 million buy wall appeared on Kraken's order book, blocking a deeper drop. 2 weeks later, ETH surged 65% to $2,560, driven by positive ETF news. I monitor the order book with Tape Reader. If there is a buy limit cluster in the support zone, it is a sign that institutions are entering, said Lena, an algo trader from Berlin who utilized this pattern. OBV, the volume detective that reveals hidden scenarios. On-balance volume, OBV, is a key indicator to distinguish between genuine capitulation and fake breakdown. Divergence example, SOL/USD on Coinbase, January 2024. SOL fell from $120 to $85, minus 29%, but OBV increased by 15% during the same period. What this means, the price drop was not supported by strong selling volume, only stop-loss action and retail panic selling. Result: SOL rebounded to $104 within 10 days after divergence was confirmed. OBV is the GPS of liquidity. If the price is falling but the OBV is flat/rising, it's like seeing a tractor trailer turning around in traffic, explains Andre, a trading mentor from Paris. Iron Law. Don't immediately believe in volume spikes. Valid capitulation. The price should rebound 5 to 8% from the lowest point in 24 hours, with consistent buying volume. Covert accumulation. Cross-check between spot and futures volume. If spot volume is high but funding rate futures are neutral, this is a sign of accumulation. OBV confirmation. Wait for divergence to occur on at least 2 timeframes, e.g. 4 hours plus daily. The bitter story of false capitulation. In March 2024, ADA, Cardano, plunged 20% to 45 cents with 3x average volume. Many traders thought it was a capitulation, but the price continued to fall to 38 cents because there was no buy wall in the order book. Those who entered at 45 cents lost 18% in 48 hours. Rahia's weapons to detect capitulation. 1. Volume spike plus RSI oversold. If RSI less than 30 on the daily chart accompanied by 2-3x average volume, the chance of rebound is 70% higher, backtest data 2020 to 2023. 2. Liquidations heat map, Bybit/CoinGlass. Genuine capitulation is often followed by large liquidations of short positions. See XRP liquidations of $110 million during the January 2024 rebound. 3. Social sentiment extremes, sentiment. When the social sentiment score reaches -1.5, extreme panic. It's a contrarian signal to buy. Why volume is the universal language of the market. In London, Singapore, or Texas, volume is the same language. When BTC dropped with historical volume on Coinbase, hedge funds in the US immediately analyzed the flow of funds. When a $200 million buy wall appeared on Kraken, European traders flocked in. Volume is a story that can't lie. Behind every capitulation, there is always an institution swiping a giant buy order, said Clara, an ex-JP Morgan trader who now manages a crypto fund in Zurich. Practical challenges. 1. Open the BTC/USD chart in TradingView. 2. Find the capitulation point, volume spike plus price rebound, in the last 6 months. 3. Calculate the risk-reward if you enter at the lowest point with a 5% SL. What percent of profit can be achieved? Chapter 3. Bullish divergence. Detect indicator whispers before price moves. What is bullish divergence? Imagine that the price is going down, but indicators like RSI or MACD start to rise. It's like watching a car roll down a hill, but the speedometer shows less acceleration. A bullish divergence is a hidden signal that bearish momentum is weakening, even though the price has not yet reversed. RSI divergence. When indicators rebel. The Relative Strength Index, RSI, measures the strength of a trend. Divergence occurs when price forms a lower low. RSI forms a higher low. Real example, BTC/USDT on Binance, July 2023. BTC price dropped from $30,000 to $28,000, minus 6.7%, in 5 days. The RSI actually rose from 32 to 45, forming a divergence pattern. Result, BTC rebounded to $31,500 in 72 hours, driven by positive news of the BlackRock ETF. RSI divergence below 40 is like a fire alarm in the stock exchange building. I immediately checked the order book to confirm the flow of funds, said Marco, a Milanese trader who pocketed 12% profit from this setup. MACD histogram, momentum change detector. MACD histogram is the difference between the MACD line and its signal. A divergence pattern is seen when price declines with consecutive red candles. Histogram, green bars start to appear and get higher. Success case, AVAX/USD on Coinbase, November 2023. AVAX plummeted from $22 to $16, minus 27%, but the MACD histogram started to rise from minus 1.2 to plus 0.8. Confirmation, by volume increased by 40% at $16. Result, AVAX shot up 85% to $29.60 in 3 weeks. I don't care about price. If the MACD histogram forms an inverted U pattern in the oversold zone, I'm ready to enter long, said Rachel, a Toronto-based institutional trader. Legendary example. ADA rallies 200% in early 2023. Case study, ADA/USDT on Binance, January-March 2023. December 2022. ADA plunges to 24 cents, ATL, with weekly RSI at 28. January 2023. Price retested 24 cents, but weekly RSI rose to 35, divergence. Confirmation. Weekly buying volume jumped 3x in the breakout week. Result, ADA skyrocketed 200% to 72 cents by April 2023 on the back of AI hype plus Cardano upgrade. The weekly divergence was a heavyweight signal. I allocated 15% of my portfolio in ADA when the weekly RSI diverged, said Victor, a fund manager from Prague. Divergence traps. Don't fall for the false signal. False divergence. Binance, XRP/USDT, May 2024. XRP displayed 4-hour RSI divergence at 52 cents, but the price crashed to 48 cents due to SEC lawsuit update. Cause of failure. Divergence occurred on a small time frame, 1 hour/4 hour, with no confirmation of volume or macro sentiment. Golden rule. 1. Use divergence on high time frames, daily/weekly, for strong signals. 2. Confirm with resistance level breakout or by volume. 3. Stop loss is mandatory. Example, SL 5% below the divergence entry point. Companion weapons for accurate divergence. 1. Volume confirmation. RSI/MACD divergence plus increased buying volume equals high probability signal. 2. Time frame alignment. Look for divergences that appear on 2 time frames at once, e.g. daily plus 4 hour. 3. Macro sentiment. Make sure there are no risk events, e.g. FOMC meeting, that could cancel the signal. Recommendation tools. TradingView, to plot RSI/MACD divergence with alerts. CryptoQuant, analysis of real volume, including exchange inflow/outflow. CoinGlass, monitor futures liquidation to avoid fake breakouts. Why divergence is effective in global markets. Traders from New York to Frankfurt use standard RSI/MACD parameters. Period 14 for RSI, 12/26/9 for MACD. When divergence appeared on the BTC chart on Coinbase, thousands of trading algorithms reacted in unison, creating a self-fulfilling prophecy. Divergence is the secret language of the market. When indicators and price are out of sync, it's a sign of an imbalance that will be corrected, said Dr. Elena, PhD quantitative finance from Switzerland. Practical challenges. 1. Open the ETH/USD chart on the weekly time frame. 2. Look for bullish divergence of RSI or MACD in the past 1 year. 3. Calculate the risk-reward if entering at the confirmation point. Entry. Price when the divergence is confirmed. SL. 5% below the entry. TP. 2x risk. Example. 5% risk, 10% profit target. Example. ETH entry at $1,600. January 2023 divergence. SL $1,520, TP $1,760. 10% profit achieved in 2 weeks. Keyword. Divergence is not magic, but a probability signal. Combine it with strict risk management, and you can capitalize on market imbalances before the crowd realizes. Chapter 4. Don't fall for knife catching. The art of crisis survival with risk management. What is catching a falling knife? This term describes a trader who buys an asset when the price is free-falling without confirmation of a reversal, like trying to catch a falling knife risking getting seriously hurt. In the crypto market, this often happens when FOMO, fear of missing out, trumps logic. Bitter example, Luna/USDT on Binance, May 2022. Luna plunged from $80 to $0.0001 in 3 days. Traders who bought cheap at $10, $5, or $1 without stop loss lost 99 to 100% of their capital. I thought $1 was a steal. It still fell off a 100-story building, said Dave, a Texas trader who lost $50,000. Anti-knife strategy, the golden rules of professional traders. 1. Stop loss, the protector of your portfolio. Stop loss, SL, is the limit of loss that must be set before entry. Practical example, XRP/USD on Kraken, July 2024. Buy entry at 45 cents due to bullish Ripple versus SEC prediction. SL was placed at 40 cents, 11% risk. Result, XRP dropped to 38 cents due to the court defeat. Loss truncated at 40 cents, not 38 cents. SL is life insurance in trading. Without it, it's like walking on the edge of a cliff with no safety net, said Sophie, risk manager at a London hedge fund. 2. Avoid FOMO. Wait for confirmation, not emotion. FOMO often arises when assets drop dramatically on high volume, triggering the illusion of a discounted price. Real case, BNB/USDT on Binance, June 2024. BNB dropped 20% from $600 to $480 in 1 hour due to a questionable audit report. Panic traders bought at $500 because it was bound to rebound, but the price continued to drop to $450. Solution: wait for the 4-hour candle to close above $480 plus by volume to increase. FOMO is enemy number 1. I always ask, is this a logical decision or just fear of missing out? Klaus, Frankfurt trader. 3. Macro sentiment. Don't fight the Fed or regulators. Macro news can kill technical trends in minutes. Regulation impact example, SOL/USD on Coinbase, September 2023. SOL fell 25% from $32 to $24 in 2 hours after the EU announced crypto staking restrictions. Traders who bought the dip without reading the news were stuck losing 15% in a day. Key: use economic calendars, CoinMarketCal, investing.com, to avoid risk events. Tools to avoid pitfalls. 1. Trailing stop loss. Automatically shift SL to follow gains, e.g. SL 10% below the latest high. 2. Liquidation heat map. CoinGlass. Avoid price zones with large liquidations, e.g. $50,000 BTC area is often targeted by whales. 3. Historical volatility. ATR indicator. If BTC's daily ATR greater than 8%, the market is too hot to enter without a tight SL. Success story. Traders who survived because of discipline. Case study. ETH/USDT on Binance, March 2024. Sarah, a London trader, wanted to buy ETH at $3,200 when it dropped from $3,600. However, 2x average sell volume, delay entry. Set an 8% SL at $2,944 if forced to enter. Wait for daily close confirmation above $3,150. Result: ETH continued to drop to $2,800. Sarah survived because she didn't enter prematurely. Discipline is boring, but it's what makes the difference between a trader lasting 10 years versus 10 weeks, she said. Why does this rule work in the global market? Market psychology is uniform. When BTC dropped 10% on Coinbase, traders from Tokyo to Zurich felt the same panic. But institutions have algorithms that automatically apply SLs and news filters. Retail loses because they trade with emotions. We trade with spreadsheets and conditional orders, says Pierre, ex-Goldman Sachs, who now runs a $200 million crypto fund. Practical challenges. 1. Choose one asset, e.g. ADA or Doge. 2. Determine the knife-catching zone, price drop greater than 15% in 1 day. 3. Simulate. Entry without SL, calculate maximum loss. Entry with 8% SL, calculate risk. 4. Compare the results after 1 week. Example: Doge dropped from 15 cents to 10 cents, minus 33%, in 24 hours. Entry without SL at 12 cents, lost 50% to 6 cents. Entry with 8% SL at 12 cents. Exit at 11 cents, 8% loss. Final word. Knife catching is gambling. Trading is the art of survival. In the crypto market, the one who lasts the longest is the winner. Chapter 5. Fundamental Analysis. Reading the story behind the numbers. Large liquidations and Ponzi scheme collapse. Lessons from Luna/UST 2022. Tragic example: Luna/USDT on Binance, May 2022. Root of the problem: UST's algorithmic mechanism failed to maintain the $1 peg, triggering a death spiral. Liquidation volume: $45 billion of crypto assets vaporized in 3 days. Fundamental signs before the crash: increased whale activity, transfer of 500 million UST to exchanges a week before collapse, observed on Snowtrace. Anchor Protocol, DeFi Terra, shows $10 billion outflow in 2 weeks. This is not just a correction, but a systemic collapse. I got out when I saw the huge outflow from Anchor, said Hiroshi, a Japanese trader who survived the Luna storm. Profit-taking and the coin meme cycle, when retail becomes fuel. Example: Pepe/USDT on Binance, May 2024. Pepe rallied 700% in 2 weeks to $0.000015, fueled by Elon Musk hype. Profit-taking trigger: whales sold 2 trillion Pepe, $30 million, in 1 hour, detected on Etherscan. Result: price plummeted 60% to $0.000006. Meme coins are like fireworks. Institutional speculators are always first in and out before retail realizes, said Diego, a Mexican trader who shorted Pepe at the peak. Regulation and market time bombs. Coinbase versus SEC case. Real impact. Coin/USD on Nasdaq, June 2023. SEC sues Coinbase for alleged securities violation. Coin shares fell 20% in a day, resulting in BTC falling 7% to $25,000. How to anticipate? Monitor the Calendly economic calendar for the court decision schedule. Use Sentiment's social trends for early detection of regulator FUD. Regulation is the biggest risk in 2024. We always hedge our position with options when there is an event like this, said Laura, an analyst at BlackRock. Hybrid strategy, technical plus on-chain equals super weapon. Application example, DOT/USD on Kraken, August 2024. Step 1. On-chain volume check, crypto quant. DOT dropped 25% to $4, but the volume of transfers between wallets increased 200%, whale accumulation. Step 2. Technical analysis. Formed a hammer on the daily chart with oversold RSI, 29. 50 EMA at $4.20 as key resistance. Step 3. Regulatory confirmation. There is no negative news about Polkadot in EU/US. 4. Entry. Buy stop at $4.21 after closing above the 50 EMA. 5. Risk management. SL at $3.90, 7.5% risk. TP at $5, 1 minute and 2.5 seconds risk reward. Hybrid analysis is like putting together a puzzle. I won't enter without on-chain and technical confirmation, says Fatima, a Dubai trader who made 65% profit on this DOT trade. Conclusion: become a shark in a sea of top losers. Institutional traders on Wall Street or London aren't afraid of top losers, they capitalize on them. The secret: 1. Fundamentals as filter. Asset collapse due to a rug pull scheme, like Luna? Avoid. Asset drops due to profit-taking or temporary FUD, like Coin. Monitor. 2. Technicals as anglers. Reversal pattern plus on-chain volume accumulation equals high probability signal. 3. Regulation as alarm. Use CoinGecko's news section for real-time updates. The bear market is the best school. This is where novice traders get crushed and professional traders find pearls, emphasizes George, a London hedge fund manager with 15 years of experience. Final challenge: become a crypto detective. 1. Pick one top loser of the day, e.g. ADA or SOL. 2. Conduct a hybrid investigation. On-chain. Check whale activity on Sentiment or Nansen. Technical. Look for reversal plus divergence patterns on TradingView. Fundamental. Read the latest news on the block or Decrypt. 3. Simulate the entry with 5% SL and 15% TP. Example: SOL/USD on Binance, July 2024. Fundamentals. Decline due to profit-taking after network upgrade. On-chain. Whale bought 500,000 SOL at $120. Technical. Bullish hammer at $115 with RSI divergence. Entry: $122. Break EMA 50. SL $116. TP $140. Final word. Top losers are a mirror of market psychology behind panic. There is always opportunity. But remember, you are not Superman. Discipline and risk management is the armor that saves the life of your portfolio. Many people want to get rich overnight. I want to last 10 years, and that's more valuable. Clara, 35, Bank of America ex-trader who is now retiring young from crypto trading profits. Happy opportunity hunting with a cool head. Okay, before we end, don't forget our golden rules. 5 important rules of Mr. Suw Crypto. First, don't use hot money. Use extra or idle money. Do not use money for daily needs or money that will be used in the near future. Second, don't over-leverage. Risk what you can afford to lose if you trade derivatives, futures. Always use a stop loss because the crypto market is very volatile. Third, 70 Bitcoin 30 altcoin. Always allocate more in Bitcoin because Bitcoin is the parent of crypto. By allocating more in Bitcoin, your portfolio will be safer when the market does not meet expectations. Fourth, always stay cash. Always stay in cash 10 to 20 to buy when the market discounts or drops significantly. Then you can sell when the price has risen, so that you still have cash for the next discount. Fifth, think long-term. Investing is not about 1 or 2 days to get rich. So think long-term and minimize the risks that might make your money disappear. Everything takes time, Remember, Warren Buffett didn't build his fortune overnight. If you find this video useful, help us to continue to make videos like this by clicking subscribe and share with your family and friends. Don't forget to let us know in the comments column if there is anything you have questions about, because your comments mean a lot to build this channel. See you soon, and don't forget, HODL knowledge and mindset first, then HODL assets.